With war drums beating louder around the world, the race to modernize military tech is exploding, and drones are leading the charge. While most investors focus on the big defense contractors, one tiny US-based drone company is winning real military contracts, integrating with AI, and scaling fast, all while trading under $6. In this video, I'll show you why RCAT Holdings RCAT might be the most explosive drone stock on the market right now, and why the next conflict could send it flying. What's up everyone, I'm Robert, and welcome back to The Alternative Investor. Today, we're zeroing in on RCAT Holdings, a microcap drone company that's quietly winning battlefield relevance while most of Wall Street looks the other way. They've just landed new contracts with the US Army, partnered with Palantir Technologies to supercharge their drones with artificial intelligence, and are forecasting revenue between $80 and $120 million for this year. In a sector where most penny stocks have nothing but hype, RCAT has real momentum. Let's break it all down. RCAT develops high-performance, military-grade drones designed for real-time surveillance, reconnaissance, and tactical combat. Their lead product, the Teal 2, is a rugged, night-vision-capable quadcopter already being deployed by United States forces. This drone was purpose-built for contested environments, offering encrypted video streaming, autonomous flight modes, and battlefield durability, all while fitting in a backpack. In addition to Teal 2, RCAT's Edge 130 Blue drone just secured a contract from the United States Army Communications Electronics Command. These aren't test units. They're being delivered for real operations. The company is also Blue UAS certified, meaning it's approved for secure use across the Department of Defense. While the rest of the market sleeps on drone innovation, RCAT is shipping hardware to some of the world's most powerful militaries. RCAT's financials are starting to reflect the momentum. In the first quarter of fiscal 2025, the company reported $2.8 million in revenue, up 59% year over year. But that's just the beginning. They've guided for full-year revenue to land between $80 million and $120 million, representing exponential growth. More importantly, they're now sitting on a $13 million backlog, which means recurring, contract-driven demand, a rarity among small caps in this space. They also recently closed a $30 million direct offering to strengthen their balance sheet, giving them enough cash to scale production, expand distribution, and deepen government relationships. That puts them in a stronger position than most microcap defense players, who often burn through cash without backing it up with delivery capacity. The harsh truth is that we are entering a new era of military escalation. Conflict in Ukraine, mounting pressure in Taiwan, and unrest in the Middle East have defense budgets soaring. In the United States alone, spending on autonomous and unmanned systems is projected to exceed $17 billion this year. RCAT isn't chasing this trend, they're already embedded in it. Their partnership with Palantir Technologies, announced in April 2025, brings advanced artificial intelligence into their drone platforms, allowing real-time threat detection, mapping, and autonomous decision-making during missions. This is no longer a speculative company hoping for military interest. It's a small player doing business with the biggest names in national defense. If just one international flashpoint escalates, the demand for tactical drone systems like theirs could multiply. Because RCAT trades with high implied volatility, it's also a prime candidate for option strategies. If you're interested in exposure but want to be paid to wait, selling cash-secured puts can let you earn a premium while potentially buying shares at a discount. On the other hand, if you already own shares and believe RCAT will move gradually, selling covered calls can create consistent income while you hold. With a price under $6 and elevated options premiums, RCAT gives retail investors a way to generate real cash flow from a speculative position, which is pretty rare in the drone and defense niche. Make no mistake, this is still a microcap company. Delays in contract execution, missed guidance, or regulatory changes could hit the stock hard. Additionally, dilution from the recent $30 million offering should be monitored, even though it improved their cash position. However, unlike many defense-adjacent small caps, RCAT has already proven product-market fit, already earned federal certifications, and already started fulfilling orders. This isn't a story about what could happen. It's a company that's already operational and scaling into a larger market. RCAT is one of the few drone companies under $10 that is actually shipping product, winning real defense contracts, and growing revenue at a rapid clip. With a partnership like Palantir now in the mix and a growing backlog of military demand, this stock is in position to run, especially if war escalates and drone deployment ramps up. It's not risk-free, but in terms of asymmetric upside, there are few stocks like this on the market today. The next drone wave may not come from Wall Street's favorites. It may come from a company you've barely heard of, until now. Hey, thanks for watching. I really appreciate it. If you found this breakdown helpful, be sure to like the video and subscribe to The Alternative Investor. We dig into high-conviction opportunities, overlooked sectors, and exactly how smart money plays volatile markets. Drop a comment below. Do you think RCAT could be the next big drone winner, or is there another tiny defense play I should cover next?